Hey guys, hope you guys had a good week. Quite the interesting week if you think about it. Looking at last week, we had that huge bull run going in to the end of the week, and then Monday pushed pretty green, and then after that, it was just pretty much a big sell-off. So let's scroll out a little bit here, and we'll kind of talk about it and where we're heading next week. So currently, you can see I have this 50% retracement line right here. You can see we kind of trade over it and pop, trade over it, pop. And then here we trade under it. We try to get over it, then we dump back under it. And then here we kind of fought, and then we ripped over. And then here we bounced right off it, and we went back up. So currently, we just breached that today with that big old pre-market that we can thank FedEx for. But now we're just trading right at it. So it'll be interesting Monday, to see if we're going to breach back over this and retest the 390s, or if we're just going to straight just go for it and start going down. So one thing I want to look at here is this blue channel. So we started this blue channel using this resistance, and then this support here, and this one right here. So as you can see here, we haven't quite hit it yet. It does give us some more downside, so we could be looking at, by the 27th, looking at maybe 370, or, we could look at the 400s. By FOMOC, which is Wednesday, we could see 404, or we could break down to 375. So the most important thing I'm seeing here, though, and this kind of played out right here in the same manner, is this falling wedge. We are riding this resistance line down, and we died right here. So this gives Monday at 385.5 as key resistance. Not only is that resistance of the 50% retracement of the bear channel for 2022, it is also the falling wedge using this red line and this blue support line's resistance. If we open over 385.5, or we just breach it at all on Monday, then we should expect a push for this black resistance line right here. You can see we have the bigger, more aggressive black downward channel using all this support right here and then projected with this resistance. We have not retested this black resistance yet to see if we actually are in the blue line or the black one. It's to be determined. Hopefully we'll find that out next week. But like I said, if we break through this, then I'm going to be looking for a retest of 390. And if we can close a candle back over 390, then we might actually push back up into the 405 range and retest that. So basically what you can see, we kind of go down. We have these big dead cat bounces. We go down, have a big dead cat bounce. We go down. So we should either make one more little low in the 370s and then have a dead cat bounce to 390, or we're just going to bounce here and have a dead cat bounce up into this range. So key support, though, if we don't break out, is going to be down here at 378.8, and then eventually this blue channel is going to be tested at 378. You can see we are below this 390 level with a full candle now, so that's a pretty big deal. That should indicate we could retest the 370 support next. The weekly kind of gives us a better overall picture. Makes it look a little bit nicer. So I want to bring this support line over here again. I had it up before, and I kind of got rid of it, but now I'm bringing it back. So we're in this nice black weekly bear channel right here. It's got nice established resistance here, and we have our nice support right here. We didn't quite make it down to support at 380. That would have been nice to really reconfirm the support of this bear channel, but that's okay. So basically what I'm seeing here is we had redrawn this support line. You can see we had the 1, 2, 3 touches here on the weekly. We readjusted that a little bit last week after this candle wicked down. And you can see we finally broke through that. So now that we get rid of that support line, you can see we're kind of actually in a similar pattern right here. So that's why I trajected this purple line over here. This shows that we could, by end of October, actually hit the 330s, assuming we're in the same type of sell-off. So something to keep in mind is that most of the sell-offs that we have had so far this year have been about 15 days and have been about 13.3% drop. So currently, though, we are looking at, sorry, let me pull it up real quick here so I can give you the correct. We are currently at 22 days of selling, and we are at a 12.9% drop. So if we were to follow the trend and the average, we could see 375 to get the average of 13.3. The biggest sell-off that has happened this year so far was 31 days from March to May right here, and that was a total of 16.7%. So that 16.7% would give us back down here. So that actually is what this purple line right here represents. It's a, well, sorry, that's to June. So we would take it to this low right here. So this would represent the May sell-off and potentially where we could end up. So you can see here, we could end up in the 350s if we get a big sell-off. So the one thing to keep in mind is we did have a huge bearish engulfing candle right here on the weekly. So that should, in theory, open up the downside. But the one thing to keep in mind is that FOMC is on Wednesday. And we have to remember the market needs a reason to sell off. This morning, or I guess last night technically, they got their reason with FedEx. FedEx said the economy sucks. Market said, yeah, you're right, let's dump. But intraday, if you watched it, it really wasn't that weak. There just wasn't a lot of buying going on, but the buyers and the sellers pretty much just chopped all day long and just fought each other all day long. End of day, we had a little bit of a breakout, but that was about it. And this was a quad witching day, so high volatility, high volume, a little out of the ordinary. I mean, looking at Apple, Apple actually put in 224% of its normal volume. Apple hit a volume of 162 million today. That's actually impressive. I think that's the highest volume day I've seen on Apple yet. Let's take a look real quick. Sorry, I'm going to get distracted, then we're going to bring it back. Let's look at Apple here. So Apple hit about here. Oh, so sorry, May 12th, which was right down there. That was the only other higher day this year. Back to January. So yeah, there was looks like top 5 volume days this year. That's a pretty big volume day. Anyways, so with that in mind, we should keep in mind with FOMC that now that the markets know, because the pricing in of the 100 basis point hike has actually decreased. I think the last time I saw it's down to 15% now. So markets are like, okay, we're going to get a 75 basis point hike. While that might not be enough to combat inflation, all the market cares about, if you remember, is are they getting what is expected? They expected a 75 basis point hike. If they get what they expected, they have no reason to sell off. Now, if come Wednesday, Jay Powell's like, all right, we're going to surprise you with a 100 basis point hike. Stuff sucks. Here it is. That could lead to a massive catalyst sell-off to get us down here to 350. However, there's a pretty good chance that he's going to say, you know what? Yeah, inflation sucks, but we're going to do a 75 basis point hike. There's no meeting in October. We'll revisit November, and we'll go from there. And markets are going to be like, all right, whatever. And they're going to probably try to rally. So that's just something I wanted to keep in mind, that the technicals could be outweighed next week with the fact that there's a Fed meeting. So looking at supports for next week, we have key right here at 380, and that brings us right down here to about 375. Resistance is going to be back here at 390, 405, or 402 right here, and then eventually right here at 406.6. So going over to futures, I didn't talk about here in the daily, sorry. So we actually have a nice doji, dragonfly doji here. With a drop like this, you can kind of see it played out right here. We had a sell-off, and then we got the dragonfly. It's a little bit of a fatter body here, and then we had a push up. We could see a similar idea happen right here. We had the huge sell-off, and then we pushed up. We could see a nice pop. This is a reversal candle, especially in a sell-off. So that's something to keep in mind for Monday. Now looking at futures, nice hanging man candle right here. Same thing though. Big old downside hanging man candle. We should get a pop up based on the candle. Now, of course, volume, technicals, and things like value can outweigh technicals, and then obviously like news events, like if something like FedEx was to happen again over the weekend, that could outweigh the technicals. But I'm just saying, based on the candle, that's what we can kind of look at. Key support for next week is going to be this blue right here on Monday. It's going to put us right about 38.17, and then before that, we have 38.67. The one thing I'm taking away from the futures chart, though, is that it finally breached under 39.05 right here, and it fully closes candle under that. That's the first time in a long time that we've been able to close the candle below 39.05. So that will be key resistance for Monday, and then followed by 39.74 right here. Same thing with the futures weekly right here. You can see that we breached through this blue support line right here, so we can go ahead and get rid of that. Then we have this nice looking big old bearish engulfing candle right here. Key resistance is going to be right here at 3,900, and then it's going to be right here at 40.25, and then followed by 40.88. Support-wise, the weekly bear channel support is at 37.90, so that's what we're going to keep in mind on. If we happen to break through that, then we're going to be looking for a retrace all the way down to 36.75. So looking at Apple, same thing I was just talking about on SPY, futures. We have this big old, this one's more of like a Dragonfly Doji because the body's a little bit narrower, but Hanging Man Dragonfly Doji. This is a reversal candle. So we have a huge old sell-off, and we finally have a point where the buyer stepped back in and brought the price back up. So this will be interesting to see how this plays out on Monday. And not only this, because we have this huge falling wedge that I mentioned also on SPY with their reversal candle, and Apple has the same falling wedge with reversal candle. And now for Apple, unless we open under 149.5, which would be about a 1% drop, and we just stay below that all day on Monday, and then Tuesday just continues to push more, we're going to break that resistance. And when we break this falling wedge, that's going to open the upside for us, and we're going to test this black resistance line some point next week. So key support is going to be right here at 150.7, and then it's going to be followed by 148.5, and then we have the blue support right here at 147.1. Resistance for us is going to be 152.3, and then this is going to be the big one to get through right here at 154.7. So this Apple weekly chart is actually I don't know what it is about the Apple chart, but it is just a very nice looking chart for me as like a person that loves technical analysis. It's just very smooth looking, it's clean, and it just moves so smoothly. Like if you just watch how it moves, it's just really nice to look at. The coolest thing about this one is we have this really nice bear channel right here, and we have a perfect touch here on resistance, and then we have support and support. And the coolest thing for next week is we have a known major level at 145.5 that perfectly goes with the support line of the bear channel, and we also have a known resistance at 161.1 that also perfectly goes with the bear channel. It is very rare that a downward or upward channel also coincides with known resistances and supports just like that. So this tells us we are in a very key level right here. And after this bearish engulfing candle, it should be expected the same thing, that we probably could eventually touch 145.6, but with FOMOC next week, there could be some bullish movement coming from the markets going into FOMOC after a big sell-off this week. So support is right here, 150.7, and then like I said, 145.6. If we were to get to this level, I would consider a short DTE call bounce. It would be very risky, but knowing how well we have bounced off this support and how big it has been when we do bounce off it, even here we almost hit it and bounced, it would be a pretty good bet, and I would be surprised unless there's like some sort of unknown event like CPI where we dump through the support that we would not break this level. If we break through here, we really could probably play calls also up to 155.8, and if we do happen to really massively break out and we reject 161.1 and we start trending downward and we don't look like we're going to be breaking out, it could be a good opportunity for puts also. This would most likely play out after FOMOC or the day of FOMOC. So looking at the VIX here, I said my criteria to go long on puts was I wanted to see the VIX close over 28.3, and I wanted to see SPY close below 390. We got SPY there, we did not get the VIX there. And I said if I wanted to go long on calls, I wanted to see SPY close over 390, and I wanted to see the VIX close below 24.7. We also did not get that. So today, looking at the VIX, you can see we have this, using this support line right here, we have this resistance of this downward channel that we did wick through, which actually is kind of important that I'm going to be watching. That wick through could be an indication of some more upside, and we're still in this nice trending upward channel right now. So this is going to be, VIX is going to be really key to keep an eye on next week and as the weeks continue to tick on. So the one thing that I noticed is this 26.9 level, we just cannot seem to close and hold over that level. This morning, it was kind of unimpressive, really, the VIX. We did then start rocketing, and we hit here, and then it just pretty much started selling off all day, and we were able to close back below 26.9 at 26.3. So we have a key support here at 25.5, and then 26.9 is the resistance. It's hard to go long on anything when the VIX is not committed to your trend, because the VIX right now is just telling me there's a lot of indecision. It basically just chopped for that whole week, and then this was the dead cat bounce, and then this was CPI bounce, and now we're just kind of chopping again. So we really, if you take out the dead cat bounce and CPI, we have not really done a whole lot of anything on the VIX, which tells me the fear is not coming out of the markets, but there's nothing to increase the fear enough to sell off. Now, the thing to keep in mind with the VIX is that the VIX can decrease or maintain its level while still having the markets drop, if the markets agree with the drop. So it doesn't mean we have to see the VIX go back over 30 or back to the 40s. It just is something to kind of keep an eye on. So keep an eye on Bitcoin. It is slowly making its way down. We did close below that 20.2, and we're kind of holding the same sort of choppy area right here, just holding right over this 19.5 level. So we're going to keep an eye on 19.5, and then support to watch this weekend is really 18.8. If we were to break down below 18.8 and especially start hitting towards the 17s for some reason, that would be really bad for the markets next week, and we could expect a sell-off. However, if crypto can have a pretty bullish weekend, which usually it does, I feel like lately, and we can break over 20.2 and really start getting back up in towards the high 20s and maybe even the 21s before Monday, we might actually have a pretty green week next week. So, like I said, FOMOC is coming up. It's really hard to guess what the markets are going to react. Historically, the markets like to rally on FOMOC regardless of what he says. The only time this year they have not rallied was in January. I do not think he is going to come out with a 100 basis point hike, and if he plans to, I think we're going to see a leaked article from the Wall Street Journal again. Just like they just leaked a couple weeks ago that a 75 basis point hike was definitely coming back up in here, and we just started dumping. I think it was up in here they released that. I think they have already preconditioned the market. So there's a pretty good chance that we could just kind of chop on Monday and Tuesday, and then Wednesday really could start a rally for us because we have no FOMOC until November, and we don't have a CPI until October. So the markets really are just kind of in this like lull right now, and this is kind of what we actually saw happen here in July. We had June CPI right here and FOMOC, and we kind of did the thing and just chopped, and then right around here is when we had the other FOMOC and CPI, and then we just went on a tear because we had no FOMOC in August right here. Yeah, we had CPI right here, but there was no reason for the markets to sell off. And we're already in this green zone, this green level right here where it's known to just basically chop big. So there's a pretty good chance that we could rally. However, if Jay Powell comes out really bearish like he did here on Jackson Hole, we could see a pretty big sell-off. It'll be interesting to see what this next week brings, that's for sure. So, all right, hope you guys had a good week, and I will see you guys next week. Thanks for tuning into this video. Hope you guys enjoyed it. If you like what you saw, go ahead and hit the like and subscribe button to stay updated. I am providing my Discord link right here. That's a lifetime link. If it doesn't work, go ahead and send me a message and I will get you a new link. I do have a pre-market update I do every day where I update with supports and resistances and different scenarios that might play out through the day. I also do a live commentary throughout the day with updates and changes, and I do push out buy and sell alerts on SPY and other tickers that I'm trading at the time. Currently, membership is $20 per month or $228 per year. You can follow me on YouTube, Twitter, Instagram, or TikTok under SPY Optionaire or Reddit under Daddy Dirch.